Hi, this is Kirk with Forex Strategy Secrets, and so what we're going to be doing is introducing a complete product. This is the first time this has ever been introduced like this, so you're on the forefront of what we're doing here. It's called the Nth Degree Supreme Trading Course. Now, what I want to do is ask a question of all of you, and this is going to seem like it's a little off the subject, but I'll tie it all together. And the question is, there are two parts to it. We've probably all looked at the stars. From where you're currently living, you go outside at night, you can probably see some stars. Most of the time, when you see them, there are a few. There's the bigger ones, you can't see all the little details. Now, the other part of the question is, have you compared that to looking at stars when you're in the country, where you're in a place where there's not very many lights? It's almost like, wow, who turned the stars on when you see that? Okay, so what we're going to share with you today is from where you're at right now, you're able to see trading a certain light. Maybe you're seeing a few stars. Maybe you don't have as many lights around and you can see a few more as you experience throughout life. You know where you're seeing more or less stars. But what we want to do is take you to a place where you can see all of the stars. The lights are turned on. You see, wow, this is an interesting experience. This is what happens when you get proper knowledge. You're able to see everything in a clear perspective. So based on that, we're going to move on. The Nth Degree Supreme Trading Course has two parts. There's a strong foundational trading course where many successful traders were trained. Now, they were trained such that they are now full-time traders. They're making between 400 to 800 pips a week, and sometimes even more. And they have 95% win-loss ratios on many occasions. Once traders have found this solid trading foundation from Nth Degree, they can easily learn how to trade like the institutional traders. And from the additional part that we've added, the second part is the Nth Degree Advanced. Now, it's what that gives us is the Nth Degree Supreme. And so we'll tie this whole thing together so you can see how we have a complete program that's beyond anything that I've ever seen on the market today. First off, we want to go through the main things that you'll learn in the Nth Degree portion of the course. Now, first of all, here's some of these things we're going to be talking about you may not have heard about. You may have heard about some of them. But this one right here, this is one of the most important parts. If someone can recognize a convergence or divergence and a congruence formation in the charts, you're going to be just way above anyone else. And I want to tell you a little bit example of how that has affected some traders. That's been in our Nth Degree course from the beginning. And when the people, they struggled with it, for some reason they weren't able to see it, we shared with it to this individual one more time. And their light came on like they were in the stars. They saw the stars finally. And what that did was took them from 200 pips a week, the very next week and thereafter, never looking back, went up to 1,000 pips a week. Many times a lot more, sometimes a little less, but most of the time it's always over 500 to 600 pips a week based on understanding this one principle. So this principle tells you when the market is doing a retracement or a changing of directions. And it's heads up when a trend is coming to an end. Those are some of the things that the Convergence, Divergence, and Congruence will share with you. We call it a CDC. You will never look at the market the same way again once you understand this principle. So this is one thing that you need to understand, and that's one of the most important things that we have to share with you in the Nth Degree portion of the course. Let me show you an example of what it looks like. See, the market's coming down. I've just put a blue line here at the bottom of the price bars with these little swing lows. And this bar is on a momentum indicator, and it's going back the other way. That is called convergence. Right at that point, that's where it said, hey, heads up. The market's either going to consolidate or it's going to change directions. We can see that it did actually change directions. But right here, these first few bars, we know that maybe we ought to get out of our trade that we were trading short. There's something that says, hey, the market's going out. Now, you don't need to wait till it goes up. You can get out, clear down in this area with knowing how to read convergence, divergence, and congruence. Once you can find that, you will see that the market looks totally different to you. Now, there's an early bird. This is an indicator that gives you heads up really early when the market is making some kind of a change and gives you an early warning. This is helpful so you can look at exits of trades. You can look at entering into trades. It is a transformation point in the market. Now let's look at this. See where this arrow's pointing? Right up here, you notice there's a color change there. That's what we call an early bird. That says from that time frame, you want to usually find those on larger time frames. From a smaller time frame, you can really get some good entry signals. Are there more than one early bird showing on this page? Yes. There's one right here, and another one right here. Now notice that when that happened, there was something that generally took place in the market. That's why we call it an early bird. Heads up, take a look. You may have a trade that's going to get you some extra pips. Now, the blue light special. This is a signal where you're given the opportunity to enter a trade in the early stages of a potentially high probability trade or a high profitable trade, a trade that's most likely going to give you some pips. Blue light special. This is one of the highest quality trading entry signals you'll find anywhere in any system. When you see a blue light special, that is, wow, I better pay attention to this one. Right here, I have marked 3 of them. Each of these vertical lines, if you know what you're looking for, that is a blue light special. There are strong blue light specials and weak blue light specials. I'm just showing strong blue light specials, and as you go through the course, you'll be able to determine and tell the difference. But notice that every time you see one of these that I've marked, there's a movement in the market. It doesn't move every time, but there are many times it does move, and that is going to give you a lot of pips, a lot of confidence in getting into the market. Zone trades. Why not trade in the zone? It's a zone of what the charts are doing. The momentum's moving. This is where you can be in tune with the market, trading with the market, not fighting against it. You're able to see the momentum in the market and trade with it. That is a fantastic feeling when you say, oh yes, I know where it's going, and you get in and you and the market are just kind of in sync with one another. I've marked some zone trades here. Now there are more on this sheet, this chart, than what I've drawn, but I want to specifically point some things out. Right here, yes, there's a zone here, but there's also some no zone signals right in here. And then it comes out and goes into a zone trade. It first started off with a blue light special. It stayed in the zone. What happened up here? An early bird. Then another blue light special. And we have another zone trade. Then we had an area where it consolidated. And then we had another zone trade to trade. And there are other zone trades on here. Get the picture of how that works so you can stay in a trade. The market's telling you when it's going to change. And it's telling you what it's doing if you just know how to read it. Being able to find those entries we talked about, CDC, early bird, blue light special, zone trade. You see it starting to set up to where you're actually starting to be able to read the market. This is in our foundational part of our course. Saddle buy or a saddle sell, depends on which way the market's going. This is a signal letting you know when the market is coming out of a retracement or a consolidation. This is a setup that gives you a heads up when the trend is most likely going to continue. Okay, right here, saddle buy. The market was going up. It told you, hey, I'm coming out of this little retracement right here. This is the same chart we were looking at before. Boom. What are you in here? You're in a zone. You see a saddle buy, blue light special. You're in a zone trade. Wait until you get a signal. This is just only one exit signal, but it gives you an exit signal. You see how the whole thing is starting to paint a picture? A candy bar. Why do we call this a candy bar? This is such a sweet trade. That's exactly why we call it a candy bar. Now this is where you get heads up that the market is getting ready to continue in an already established trend. For example, this was a big downtrend. I wanted to blow it up so you could really see what I was talking about. I did a retracement, and right here, this was a signal that said, hey, you may want to consider getting into this trade, and then it did continue on down. That is one of the safest places to trade there is. That's when that candy bar signal sets up, because you're basically continuing in the same direction the trend was already going. a Camel Back. Now this is a signal letting you know that the market is in rhythm with the momentum. The price is going up, the momentum's going up. The price is going down, the momentum's going down. Now when the market is going to make a retracement or a change in direction, many times if it's congruent, this is when you'll find a Camel Back. Remember CDC, Convergence, Divergence, and Congruent? The Camel Back appears during congruent markets, or markets that are flowing with the momentum. This is a signal showing you that the price and the momentum are still moving together even though they are changing directions. Here's an example of a Camel Back. You notice that the price is going down as well as the momentum's going down. So they're congruent, but right here it says, yes, it is changing directions, but they're changing together. They're in sync. The market's just flowing. Now, here are a few other things that Nth Degree course has to offer. Now, I'm going to go through these relatively quickly. It'll help you to recognize trends. Many people have a problem finding trends until after they've already formed. We want to share with you how to find them early, how to recognize when a trend is changing, how to find high probability trades, not just a trade, but high probability trades, how and when to exit trades. That's a big challenge for many traders. Which time frames to trade and when to trade them, how to trade more than one or two currency pairs at a time, how to trade while working a full-time job, not only how to trade, but how to learn how to trade while working a full-time job, how to control your emotions, how to focus and be consistent in your trading, how to stop allowing your losing trades to run and get too far out of hand, and also how to let your winning trades go. Not make a few pips and get out, but let them go to where the market's telling you that they're going to change. And learn how to keep proper journals and records. If you don't do this, your chances of getting up to speed quickly are very small. You can get up to speed quickly if you keep simple records. You got to know where you are at, where you've been, to have a track record, know where you're going, to see if you're making any progress or not. And in the course, there are very simple methods of how to keep track of this. Learn how to get a lot of experience in a short period of time. And if you are aware or not, you have access to Jumpstart, or else you wouldn't be here. That's a free introductory entry signal course that we offer. That's yours. If you don't have that or don't know where to get it, we can show you where you can send in information to ask request to make sure you can have access to that. That will help you and show you how to get a lot of experience in a short period of time. So far, the Nth Degree has made a difference in the lives of hundreds of traders. Why do we say that so confidently? Because that's what they've told us. These are just our students telling us, not just a couple, one or two superstars, but hundreds of people saying this has made a difference in their trading, in their lives. They see hope now that they can really become good traders. Here's an example of one of the successful traders' account history from last week. Notice there was not one losing trade on that whole batch. He had every one of his trades hit at his take profit. He says he likes the color green. Well, your other choice is red, so green is a better color in this situation. And in 1 week, he made over $8,000 in his trading account. So that's just an example of what can happen. Now look right here in the currency pairs. He's got some euros, pounds, New Zealand's, Australians, euros, Zealand's, pound, New Zealand. Just a whole bunch, the whole spectrum of currency pairs he was trading. It wasn't just one or two. And that's why he was able to make so many pips, because he was trading what was moving at the time. Now let's go over some basics found in the Nth Degree Advanced course. This is taking a foundational course that is making people very successful in their trading and adding some other parts to it. This is the second part. The first part is the Elliott wave. This is the most misunderstood trading tool. Yet it's pretty straightforward. It's one of the most impactful trading tools you can find, and hopefully we can share with you how impactful it can be once you learn how to use it. Most traders don't know how to find the first wave of a 3 or 5 wave sequence, and there's always a first wave. So once you know how to recognize that first wave, you'll be able to take advantage of the other moves. And the wave that comes after the first waves are where the institutional traders trade. And that is where all the largest and safest trades are. So, if you can recognize how to find that first wave, you're trading with who? The institutional traders. They're the guys that make the market move. Okay, I've just drawn these little blue lines. This is a Elliott wave pattern. It's a 5-wave pattern. We'll go through and find some other things, show some other things that will show you how to find it. This is the first wave. And then you can see that after that, there are some really good trading methods or trading areas. Listen to these two words: impulsive, corrective, impulsive, corrective, impulsive. So once you understand where things are in the cycle, the way the market moves, it's moving, it corrects, it moves, it corrects. That's what, once you understand how to read this. Now, this is just one way of looking at it. As we get through this, you'll see how this all comes together. Now there's a Fibonacci course. Now this is used by many institutional traders. It can be used to find the Elliott wave pattern and point the way to spot the impulsive and corrective moves. Fibonacci helps to solve one of the biggest challenges most traders have, and that is, where and when do I exit a trade? Okay, now I've left that same chart up, but I've drawn a Fibonacci study on here. So you don't know where to put the Fibonacci until this starts to form. And then once you know this starts to form, you put it on and you know where it's going to retrace. The Fibonacci's give you some areas that it most often retraces to. And once it retraces to those areas, it gives you the profit targets as where it's most likely going to go. Here's a fantastic profit target. If you knew how to read this whole setup, you would have seen that you can get in. Now, what do we have here? We have the Elliott wave and Fibonacci, but let's go back. Let's not forget the early bird blue light specials right in here. That gets you in early in a trade. And this is the target right here. And that's all in the course material. And then you have a retracement. Then you have another impulsive move and some other profit targets down here, which we'll show you in just a minute. So that's how it all starts to come together now, once you can figure out how to use the Fibonacci's to find the Elliott waves, and then use all the things you already know to trade from the nth degree basic foundational course. Now, pivot points. This is another tool to help you find the bias of the market. It also marks strong areas of support and resistance. The market will hesitate or bounce off a pivot point on a regular basis. You can even trade between pivot points if you know what you're looking for and how to do it. Okay, so what I've shown and illustrated here. There are 4 pivot points on here. There's major pivots, mid pivots, major pivot, mid pivot. I've marked the areas where the market seems to bounce off the pivot point. It doesn't have to be exact. Pivot point is an area. So right here, there were many others. You can go through any kind of chart and you can see them. Right here, it's kind of bouncing off this area. You can see how, yes, it did break through, and it went up and kind of bounced off the next to pivot point. Came back down, went across here a little bit, tried to go down, came back up, hesitated, bounced off it again. Came back down, almost bounced off this one. Came back up, see where it struggled through here. But in the meantime, it bounced off that, came down, bounced off it again, came down, struggled through here as a resistance area, and another support area, and then again another support area. I just did this to illustrate how the market gravitates many times to the pivot points along with the other indicators when we all put this all together. Now, wave alert. Many of you have never heard of this. This is relatively new. It helps to solve one of the biggest challenges in trading. That is, which way should I trade right now on this time frame? You will learn how to watch the market like the institutional traders. This will help you to trade and get a feel for what they're doing. This will give you the big edge over the way you are trading now. People have really good results in the short time they've been using it and seeing how the power behind it. once you learn how to confirm that the wave is set, because it does keep on moving, but there's a way to confirm once that it's set, you'll know with a great deal of confidence which way to trade and when to exit a trade. It's these white, green, and red circles and dots. That's just marking. Notice how it happens to mark the waves. Now sometimes there are multiple wave entry alerts until you get to the main entry. I did this one because it was right straightforward and easy to see, but there are, just realize that sometimes there are 2 or 3 in between the point, but you'll be able to spot them really quickly. So it tells you how to start heads up. So we have the early bird and blue light special. So we have another tool to help us learn how to draw the pattern. Moving averages. One of the best ways to determine the market bias when you use them along with time frames. So a moving average is helpful, but have you ever tried using them with time frames? That is a interesting concept. Now when you use time frames along with the moving averages, you'll have tremendous advantage on reading the market over what you're doing right now. For example, I've just marked this one area. Notice the moving average. It helps. They're kind of doing some things. Most people say, well, I need to have a cross. Well, it didn't cross. The move was over before this one crossed, but yes, you were able to take advantage of this one. So let's go to a smaller time frame. See, they crossed. And there's heads up to tell you how to do that in the course. And of course, it's a nice little move to take a trade here with confidence, knowing that you're trading the way the institutional traders trade. These are moving averages that they use all the time. The Elliott wave and Fibonacci. Now we're going to go start to tie some of this together. Now these two tools will help you in reading some of the most important patterns in trading, and you can do it with confidence. You will be able to spot the first wave easier. You'll be able to determine the retracement and extensions with more accuracy. And here again, you've seen this. Impulsive, corrective. You can spot these retracements right up here. You can spot the extension. You can spot the retracement. You can spot the extension. So these two working together, now there's a power in each one individually. As we add more of them together, the power is exponential in the ability to help you become a proficient trader. Now let's combine the Fibonacci and pivots. Now when you use these two together, you'll be able to spot the strongest support and resistance areas. So being able to have the tools tell you that and not have to guess, well, is that a place it's going to go back to? Is that a place it's going to extend to? Now these tools will help you to predict retracements and profit targets on the extensions. So for example, we've seen this before. Now I've added the fibs and the pivot points. Because the pivot points and the fibs are together, here's two areas that helps you to show you that these are profit targets you could start shooting for. And you know that, clear back over in here. You know that that's an area that you want to trade when it breaks out from here with the early bird and blue light specials and the direction, the moving averages. It's all starting to come together. So now we've talked about the Elliott wave and the Fibonacci, and we've talked about the Fibonacci and the pivots. Now let's talk about the wave alert. By knowing how to use all four of these tools together, you're getting closer to being able to trade like an institutional trader. There's still some more things you want to add to it, but we're getting closer now. And here once again you can see that we've added the wave alert. And so that helps to know that we're getting closer to some profit targets with confidence and some support and resistance and knowing the direction we should be trading. By adding the moving averages and learning how to use all of these tools together, not separately, you can soon be trading like the institutional traders. Not becoming close, but you can trade like them with all these tools. You'll be able to read the market like a playbook. You know which plays you're going to call, when certain patterns set up, when which part of the wave you're in, what are you going to call in your playbook when you want to move the trade in your direction or move the trade in the direction the market is going. So now here we have all of it put together, and you can slightly see the moving averages. I use the same example most of the time so you can kind of get a concept of how the whole thing fits together. So now a market bias. When using all of these tools we have just talked about, so when we use all these tools we just talked about, within seconds you'll have a good idea which way you should be trading. So you sit down at the computer, you've just entered your time you're going to watch the market, and it doesn't take you long now to figure out which way you want to be trading in the market. You'll be able to figure out the entry points and setups. You'll be able to pinpoint profit targets. You'll know when to stay in a trade and when it's time to close the trade. These are biases. Everything is laid out in a simple to understand and useful format. This helps you for you to determine the market bias quickly. And so we go step by step. You learn how to use all the tools. We show you how to learn them separately, and then we show you how to put them together and see how easy it is. It looks like it might be complicated, but you break it down in just a few short sessions. You start seeing the market move and flow, and you can do it quickly. So here's just an example with all the tools on, the market bias, and you sit down and you know which way to trade. You have profit targets, and you have a lot of confidence to know what you're doing. We have saddle buy, saddle sells. We have early birds. We have blue light specials. Retracements and consolidations. We have impulsive and corrective moves. They're all shown here, and once you learn how to read it, you can learn how to trade it. Guess what I've marked here? That's the first wave. So guess how you know how to trade the other waves that we're seeing here. Now we've talked about the nth degree and the nth degree advanced, and that's going to give us the nth degree supreme. And so with that, we're going to just do a quick review. I'm going to go through these names quickly, and you just remember what we've talked about. We've covered a lot of material, but it's straightforward. It's not really that difficult if you just break it down piece by piece and then put it together. So we have the Convergence, Divergence, Congruence, that's CDC, early bird, blue light special, zone trades, saddle buy, saddle sells, candy bars, and Camel Backs. That's all the foundational material. Then we started into the advanced. This is where the material starts to be more like the institutional traders with timing. The nth degree times the entries into the way the institutional traders trade. The Elliott wave, the Fibonacci, the pivot points, the wave alert, and the moving averages all come together. What are we offering here? We've offered a complete package of how you can become a better trader and trade just like the institutional traders trade. So we're offering the nth degree and the nth degree advanced, which is, all put together, is the nth degree supreme. And we're offering the nth degree supreme for $994. And if you take this whole thing together, this is a bargain. I've seen many courses sell for about the same price, but they were only talking about one of the components that we've covered. And so you'd be way higher, many thousands of dollars, if you took each of those components and paid this kind of price for them individually. Now we have a bonus for you. And now this launch is going to go for a few days. And if you purchase the course within that few day period of time, you'll know when the end of it's going to be. There's a 65-page written document that we're going to include. Now, what this document contains is detailed instructions about the components found in the nth degree advanced. It's not a step-by-step outline like the videos. We have videos that give you the step-by-step, but this is a detailed description of what each of the nth degree advanced components are and how they work. So you have a written, and there'll be pictures there, and you have videos explaining and words to help you learn. So this document itself is very valuable. So you want to get this along with the course. So the nth degree supreme is a power-packed product that can take you to the level of full-time trader and way beyond. What's beyond a full-time trader? A fantastically successful, profitable trader is beyond just being a full-time trader. And we have many people that have reached full-time trader status, and now they're gaining acceleration and going beyond because of the introduction of these nth degree advanced course materials, which becomes the nth degree supreme. Now, to get your copy of the nth degree supreme trading system, you need to click on this link and copy it into a browser. Enter it, copy it, type it in a browser, click on it, and then you can purchase your copy. Now, you may have some questions. You may want to figure out, well, do I want the whole thing, or do I want half of it, or what do you want? I would suggest you very seriously consider getting the whole nth degree supreme. But check with Michael at forexstrategysecrets.com. He has a direct line, the 801-805-0159. Now, if he doesn't answer the phone, it's because he's probably on the phone. But leave your message. Leave information pertaining to how he can contact you back. If you phone in, because that's an easy way for you to do it, leave an email address or a Skype address. If you send an email, leave a phone number or a Skype address that he's going to be able to get back with you. And set a time when you two can get together and discuss some things and answer to your questions that you might have pertaining to the nth degree supreme trading course.
Hi everybody, this is Michael. I'm here with Kirk. I've been working behind the scenes here a little bit. This information that Kirk presented today works for me. I've been applying it for the last several months, just concepts of it. But I'm learning how to put it together, and my trading is becoming much more consistent, Kirk. And I'm having much higher percentage wins and much bigger wins with this material. So
I don't know why that example of the stars came to mind, but any of you who have seen the difference between stars in the city or where there's a lot of lights, and then you go to the suburbs and you can see a little bit more, meaning where it's not quite country, but it's not quite bright lights from the city, and then you go totally to a place where there are no lights, no artificial lights, just the natural light of the stars and the moon. That's what the difference this can do in your trading as far as clearing things up, and you're going to be seeing things that you've never seen before in the market.
Just like to add one thing, Kirk. The materials that we painstakingly put together are in fact a representation of many years of experience at trading, and if you view it as a jigsaw puzzle, trading is a bit like that, really. You learn one element of trading and then you realize you need to learn another bit. And like a jigsaw puzzle, you get the complete picture when you add so many pieces together. When you fuse together Elliott wave with Fibonacci and pivots and wave pattern, knowledge of wave patterns that keep reoccurring over and over, one of the secrets to good trading is learning how to trade repeatable patterns, because the markets can only go up, down or sideways, and if you learn how to recognize the context of the market, whether it's going up, down or sideways, in advance of it actually doing that, or having a good idea where the market is going to go because you've got the context of the market. In other words, you may have 3/4 of the pieces of the puzzle, but because you've got 3/4 of the pieces of the puzzle, you can use your imagination to know where the other, say, 25% of the puzzle is going to fall into place. So you learn to obtain predictive skills analysis to predict. Because of the shape of the market leading up to a certain point, you know with a very high probability and a bit of experience where the last pieces of the puzzle fit into place. And the key here is knowing how to put all those pieces together to give you a full picture. We painstakingly put together the materials of this course to provide all the component parts of that puzzle, so that each day you come to the markets, you have a much better idea about where the market is going to go and why it may go in that direction as well. So I hope that helps.
Whenever I put a puzzle together, I usually start with the edges. That's kind of give you a basis as to where you want to put your trading into. And then you start picking out key points, like maybe there's a batch of dark things or a batch of a certain color. And so those will be the indicators. You start putting those together. And then as you build the whole picture, you start filling in the differences between these two major areas which fall within the major framework of the whole puzzle. When that happens, you get a complete picture of what you've been trying to accomplish. And you think, wow, that was easy to do. Like, why did I struggle so hard on it? But it was enjoyable getting through it in most cases if you like puzzles. So thank Mitch for that example.
Really want to thank Mitch and Kirk for their dedication to putting this thing together. I have learned so much just by watching the webinars and by being able to trade with Kirk and Mitch in the trading rooms that my trading has improved. I started with Kirk and Jed back in 2009, early. Finally feel that I have mastered the principles of the nth degree course that Kirk first mentioned. And there's still room for growth. But when Mitch and Kirk introduced me to these concepts of the Elliott waves and pivots together, recognition of these patterns, oh my gosh, it's been phenomenal. You know, there just aren't really words to express it. I want to thank you and Kirk, Mitch, for putting this together. This has been a major project and a horrendous labor, but we will be the beneficiaries of all of your knowledge and look forward to years of trading with you.
Oh, thank you, Michael. Yeah, I know the putting together of the course was a pleasure. Yeah, it was quite hard work, but it was very rewarding work, being able to, you know, put together this puzzle of knowledge which will enable people to put, you know, growth, to be able to sort of turbocharge their trading results, to finally start to see some consistent results, because it's all about a finite body of knowledge, which, you know, it doesn't go on forever. There are only so many pieces to the puzzle that you need to learn, and then when you learn those pieces, you can come to the markets each day and trade repeatable patterns, because that's what it's all about.
Mitch, just for your information, what I like about this is that these concepts have been very difficult for me to try to wrap my mind around. I've read books on them, I've read articles. You are so clear in your communication and have simplified these principles to the point where even I can understand it. And it makes a huge difference to be able to just understand it. And that's the one thing I wanted to convey to this group, is that this training is as clear and understandable as any training that you'll ever get on these subjects. Promise you that.
Yeah, it was an important point because that you mentioned, Michael, because when I first learned these you know, concepts of the market, Elliott wave and Fibonacci, you know, I heard a lot of people saying, oh, this is too difficult to learn. And the way some educators explain it and you know, describe it, it is quite difficult. And it's not every day that you do see clear Elliott wave patterns, but certainly you do see moves happen each day out of consolidation, and then you see, even if you're not seeing a 5-wave pattern, very often you're seeing a 3-wave zigzag. And to be able to decipher that knowledge and to be able to explain it in an easily digestible format. In other words, we've designed the course into bite-sized chunks, really. So you don't have, you know, it's a bit like if you want to digest an elephant, you wouldn't eat it in one sitting. You'd cut the elephant up into slices. Well, it's not quite an elephant. Maybe it's a baby elephant. But there is quite a lot of knowledge here in the course. And if you just take it bit by bit, piece by piece, and then you piece all the bits together of the puzzle, and then you have you know, really a confident context from which to view the markets each day. And it took me some time to learn these concepts, but then I was at great pains to be able to explain these concepts in kind of layman's language, you know, in a way that the average guy in the street could understand this stuff without sounding, you know, too technical or too difficult. We've taken our time to put it together into easily understandable bite-sized chunks, so you can layer that knowledge bit by bit by learning one section at a time. And I hope we've been able to achieve that, you know, result of being able to describe fairly complex concepts, but in a very kind of easily understandable format. And that's what we've achieved here.
The one thing that Mitch has shared with me is he's been trading for quite a while before he came to our course material. He knew the Fibonacci's pivots and the Elliott waves. He knew that before. He learned that the hard way. He had to grasp it and wrap his mind around it. But when he saw that tied together with the nth degree material we talked about first, it just fine-tuned his entry points. He knew the targets. He knew the retracements and the extensions, but timing the entry was a challenge for him. He wasn't always consistently right on timing his entry. And with the introduction of the nth degree in those signals we talked about, the early birds and blue light specials, for example, that fine-tuned his entry, and he was able to read the market more clearly, and it has improved his trading, putting this all together. I came from the nth degree course material. I was exposed to the Elliott wave and the Fibonacci's, but I didn't know how to use them together. And once we saw those concepts used together with the nth degree, my mind was just I just went out and saw the stars. Somebody turned on the stars. and so I thought, wow, this is beautiful. This is simple. It's magnificent. And so I am still getting better. I'm really better than most people at it, but I'm getting much better myself. As you continue to work with it on a day-to-day basis, you'll become much better as well. When I spot something and I can say, well, based on the patterns, based on the fibs, based on the pivot points, based on the Elliott wave and the momentum indicators, I can see this is going to retrace a little bit before it continues going in the direction that it was initially headed. And I know that in the trading rooms, there are many people amazed that I'm able to pick that out. And I don't know exactly how far it's going to retrace, but it does retrace some. And many times it happens during the trading room and then takes off so they can see it and we can explain what was happening as we're there. Other times it happens after the trading room's closed. But it does happen, and if they're taking notes and watching that, that's amazing. And we have traders that are much better. Some of our students are much better than Jed and I at trading. Now, a report. Last week was a phenomenal week. Jed told me how many pips he made last week. I'm going to share with you a little bit about what that really means. Jed made over 1,000 pips last week. Jed has just moved his whole household to an apple orchard, a farm, and so he's got all these things he's dealing with the move. He still made 1,000 pips trading. He was in collaboration with other traders that are equally as good. Okay, there was 4 people that reported trades, is what they did last week. Another one did 1,400 pips. Another one did 1,700 pips. And another one said he did 2,400 pips last week. Wow. And the chart that I showed you was a part of the guy that did 2,400 pips last week. Now, does he do that all the time? No. But does the person that did 1,700 pips do that sometimes? Yes. It blows me away when they have these weeks where they're over 2,000 pips. Now, those are the exceptions. The market's really working, and they just know how to capitalize on it by trading more than one currency pair and get into the moves. But the point is, these people are making 400 to 600 pips on a bad week when everybody else is losing money or not making anything at all. Learn how they trade. Come and trade with them. Talk with them. We have an inner circle. Come and join the inner circle and see how they collaborate. That's the key to why Jed was able to do what he's able to do. He doesn't have time to sit in front of the computer. He has time to look for a few key things. They point something out and say, hey, heads up on this. I'm waiting for a blue light special. And when it passes this fractal, this support and resistance area, and here's my profit target. He knows exactly what they're talking about. He says, boy, I agree. I understand exactly what you're talking about. He takes the trade because they're talking the same language. It doesn't make any difference which time frame you're trading, whether you're trading the day and the 4-hour. I'm going to give you some information here. Those are the time frames minimum you should trade while working a full-time job or learning how to trade while working a full-time job, or you have a busy schedule. Larger time frames. It doesn't make a difference if they're trading the larger time frames, mid time frames, hour 30-minute, or the hour and 15-minute. The principles are all the same. They can trade with one another and know exactly what they're talking about. And that's how he was able to do it. So we would invite you to join with us, visit us in the trading rooms, come and see how you too can make those kinds of pips. There are professional traders who don't make that much on a month, and these guys are making it in a week on a regular basis. They're making 2 to 3 times in a month what most traders make in a month. So it's just phenomenal. One fellow reported he closed one trade for 30 or 40 pips and opened another one during the trading room and closed it for 40 pips. And that's right while we're talking, and he's just trading along and he's sharing things, and everyone else had the opportunity to take those trades as well. So I don't know how other people come out on that. We didn't have time to figure it out, but it's there. Take the patience. Oh, and that's another thing. There's this one trader, he's been around in the trading market for decades. I think someplace over 40 years. And he was saying, I'm waiting for this to do this, for this setup. And when it happens here, I'm going to get in. And when it does this, I'm going to add on to it. And when it does this, I'm going to exit. And this one, and he was just painting the whole picture out. He knew exactly what he was looking for. But everything he was saying was shouting the word patience. He said, I'm going to wait till, and when this sets up, I'm going to. He was waiting for the market to come in line with what he was looking for. So you just learn how to trade with traders, have patience. And then when you mark down on your demo notes and you say, okay, he said he was going to do this, you do the same thing when the market actually does that. You take a demo trade or you write down whether the trade was going to go, and then but the profit target, go back and see if it did just exactly what they talked about. Many times it does. And if it doesn't, they usually tell you what they did to manage it, because it did something a little bit different. But yeah, come and join with us and trade with some experienced traders.